Okay, I'm looking at the Adobe chart. This is a couple of days later from the previous videos I shot. At the time, on the 20th here, it was a live video showing I was buying Adobe at the top of this green bar, and I also showed I exited pretty quickly here, and obviously, that ended up being a good move as the price collapsed by the end of the day, and then we followed through a little bit lower on Friday. Right now, I think. Well, if you're looking back on this sometime in the future, you won't remember, but it's really a terrible market environment. A lot of stocks are heading down. This was one day where, um, you had the nice green opening. Maybe there'd be a rally, so I gave it a shot. But that's why I was ultra conservative with any long trades I was taking. And frankly, I've been buying puts during the last few days more than anything else. But anyway, the reason I wanted to shoot this video is to kind of just explain how I generally look to control risk on these trades. I've been asked about that. And first of all, when I get in these trades early with the 15-minute bar, in general, my stop is the midpoint of that first 15-minute bar. So anytime you'll see entries up there and then they move favorably, I was definitely monitoring that halfway point to start in case you got a little bit of a pause before it head higher. Also, I kind of know my maximum loss for each trade. So sometimes if I get in up here and all of a sudden I start getting a big red bar happening and it kind of hits my loss level, depending how many shares I'm trading on that particular trade, I might get out quickly. And then as it's heading down, I know I can always re-enter again, either if it just completely, on that same bar comes up above the first 15-minute high, or sometimes you get an inside bar. So a lot of times I'm re-entering, trades here and there if they don't immediately go my way. There's no real, exact science to the way I look to do it, but I'm just giving you a general idea about how these early trades take place, in terms of risk control. And then when they do go my way, like here's a trade the day before, if I would have gotten long, it's above the midpoint of the prior day, first green bar. This one got long like at 521, it got up to like 528. So this is like 7 points of gain. I would have been, knowing the way I trade, I would have been scaling out half the position way before the top of this because that's what I'm looking to do. That cuts my break even point to about the midway point of that bar. And then I kind of watch it. And truthfully, sometimes on a big move like this, I just might exit. I kind of know where targets are, and that type of thing, and just take my gains and that's it. And even if I miss a big move, so when I get the big, move right away, sometimes I'm exiting real quickly. But I'm always trying to control risk in some form. So to me, scaling out does that because then I can break even if it comes down. But truthfully, if it goes up here and I have a nice gain and then I see a pause bar and it heads down and that still is giving me a nice gain, I'll usually exit. And there's a few, if I go back on this particular stock, I can show. I think there's a couple of days in here, even though we have where I'm just trying to find that really good first move of the day where, well, here would be a good example. So, if this was a red to green kind of move, I was looking to buy early, red bar held, second bar went up, then all of a sudden, boom, 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 I might be getting out right here. But you can see it just continues up, 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 up. And at that point, if I did hold on and just kept watching the 15-minute bars, or at least for the second half of the position, as soon as I see a pause bar anywhere, I know I've got the maximum gain somewhere in the, early day with this type of price action. I'm just getting out. And again, maybe later I'll look for a secondary trade to head up. If I take that secondary trade in here, let's say a 15, 2 down, 2 up type of thing, yeah, I mean, I'm definitely kind of having a stop generally below there. I want to see a nice green bar form and follow through. And then again, I'm pretty quick if it's not going to hit that intraday high to get out. So no matter, what trades I take, I'm looking to control risk very quickly in some manner. And sometimes I just don't like it and I get right out knowing I could re-enter. So just thought I'd show that here in a video. Let me go back. If I can find the slider on this. I'm doing this by hand. Oh, here it is. But in this condition, again, this was a type of trade where I kind of knew I'm in a very tricky market environment. So this one, I didn't even, once it was just failing to, that's another thing too. I guess I wanted to show that on this one and then some others that if that first bar, as soon as you get the green bar, I'm expecting immediate follow through when you see a big green bar. If I can't get that on the second bar and certainly by the third, I'm just exiting right away because I just know what a good, after following the 15-minute chart for, looking at thousands and thousands of these examples. Like here's an example. If I would have got, here's the, red to green move, inside bar, I would have bought there. As soon as we came up and couldn't follow through above that first bar, I'm exiting right away because I could just sense we're just pausing there. Then in this, and if it goes up, I miss it. I mean, but the failure is the failure. Then it comes down and we get another one in here. And in this case, I might rebuy it, because we're still inside that first bar and then looking for and at that point I have a much better entry up here to then target this first high, and I'll probably be exiting into that or at least scaling out and then seeing if we get a little more follow through in case this was really the first move of the day, delayed a little bit. So anyway, that's the thing. It's that first bar that's the reference point to everything. If I'm buying a little before there, I want to see immediate follow through or else I get out. If I'm buying at the top of the green bar, the midway point of that green bar is sort of my stop, but I'll also get out quicker than that. So any of these trades, the key is just controlling risk, controlling risk, controlling risk, and there's a lot of ways to do it.